we are going to cover the multiples of threes, right? And in everything that you do, everything is mathematical, right? And this is why some people understand trading at a high level and some people don't. This is why, algorithms are simply mathematical equations that are based on how people move and perform based on laws of average, right? So, what we're going to teach you today, what's up, superstars? We're going to teach you to Josh, Mr. Music. Yo, invite, come up, brother. And what we're doing here is innovative concepts. Guys, listen, share the live. We're getting started here. Is understanding the basics, right? So you're playing a game here. This is just a board game of chess. This is a mathematical equation game. The very first thing you need to do here is start to understand everything is mathematical, right? Once you understand the parameters of a game, then you can make moves inside of the parameters and the rules, right? So you can stop guessing, stop wondering why you're terrible, stop wondering why things happen. Everything is mathematical, right? And we're going to show you that today at VC Crypto Nation, and we're going to show you the equivalence of threes, right? So let's get into this real quick. And innovative, what up, baby? Hello. So we're going to show you the threes. So first thing is before you start your day of trading, right? You need to look at how your week is going, the basics, and normally this is going to start with a Monday because you want to trade your Monday through Friday with the institutions. When it comes to weekends, weekends are where you hunt down the liquidity grabs, meaning the exhausted trades, and move to the downside because there's not, institutional money. What's up, detail? And when there's not institutional money, well, then everything becomes very, stagnant, right? There's not enough money to support moves. And most of the time, institutional money will already be out the market on the weekends because they want to see if there's not something that's coming up, manipulation in the news or whatever is coming up or what their position is. They're going to move out of it. Now, how do you understand the best way to trade, right? It's called the market maker strategy. If you're interested in the market maker strategy, I'm about to show you. So if you have, I'm going to be on here for an hour. It's going to be a 1 hour lesson. It's going to go by pretty quick, but you're going to want to follow. Right, hit that follow button real quick. Start hitting the like button. We need to get up to 100,000 likes, but we're going to show you the market maker strategy. This will give you an overall understanding of the game that you're playing. I love playing video games. I love chess. I love a lot of games because they're strategical and they're mathematical in their equations, and everything is based on what I call the law of average. The law of average simply means it's just like when you flip a coin. It's going to land on heads more than it lands on tails. That's just the law of average, right? Now, if you're always going with the law of average, being the highest equivalent possibility of actually winning, then you are at least putting the odds in your favor. So let's begin here and simply go over the basis, right? So if you're trading on Monday, right, you want to take a look at your Monday. You want to look at your weekly, right? You can see right here on Monday, the 19th, January 20th, right here, the 19th, you can see that the week started off on a down move, right? Which brings us to where we are today, right? So here's the date right here, last week. And you can see that at the beginning of last week, we had a moment where it was cracking a push up to the top. Now, the thing about indicators and understanding it, people call it lag and this and that. What it actually is you're not going to see this printout here that came out with this downside, right? Because at that time, it was the beginning of the week. So you weren't going to see this down movement here until the week ended, which was today, right? So from one point to another, there was a downward move. Now, if you checked this last week, you would have seen this upward move, right? So last week you would have came in and you would have saw that currently you're in an upward move, right? Now currently we are in a downward move, right? Meaning that's what happened during the week. Now, what we can look for here, because this really just tells us what happened, and now the volume is so low that it's cranking towards the downside. So now that we know what the weekly momentum is, we have to figure out what is going to move this momentum back to the upward position or if it's going to continue in the downward position, right? Now, a lot of times what I'm looking at is these charts here. This is called a stochastic RSI, and it rides up to from 0 to 100, right? And it's pretty basic, right? So here's the 100. I'm going to put a line here at the 100. And that's just the top, right? That's exhaustion. What this really is stochastic RSI is simply the sentiment, right? If you guys ever heard of the sentiment, hit ones in the chat. Sentiment just means the sentiment of a trade, meaning that what are the buyers and sellers doing and what is the market thinking, right? So here's your retail buyers. They're buying here, buying here, buying here. That's the sentiment. Then they're selling here because it's exhausted. It comes back up and then has a down move. Now, remember what I'm teaching you is to understand that everything's mathematical. Once you have a push up, there's always two moves, right? So here's a move up, here's a move down, and then your move up. Three moves. So the equivalent of three. Up, down, and then your shot. Just like here, it pulls down, it bounces, one, two, and then it has its big move, right? The equivalence of three, right? One, two, three, one, two, three. Now, what we're going to do here is cover these things to help you have a better understanding of what your law of average should be and where you should be looking to go in what direction that allows you to at least trade with the market makers. So now that we have this kind of squared away here, we're going to bounce this out. Bing, 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 bing. And what we're going to do here is go take a look at the next one, which is now that I know the weekly is kind of headed down or it's been a low volume week, then I can start looking at my daily to start seeing how much more low do I have, right? And we just covered this, right? You have a move to the down, then there's a bounce, and there's a third move, right? So first move down, boom, the bounce, second move down. So this means that we're coming around to equivalent of the next move, right? What would be the next move after this? It would be an upward move, right? You could tell here, same thing. Once you get to exhausted, you had a move to the bottom, you had a bounce to the top, and then you had your third move down, right? So everything is the equivalent of threes, okay? So right now we're due for an upward move, okay? So this is where you can start seeing to yourself, all right, I'm looking for, upward moves coming down the road. Now remember, equivalence of three. This is a daily, which means that if the daily is made its move, here's the day here, just to kind of show you an example. So here's the first move up was Thursday to the 23rd, 24th, right? And then the 24th, the next day it started to head down. So day one, Saturday, Sunday, day two, Monday. So we're in our third day here. So we probably have one more day of down before we see our up, right? Because we have our 3 days, right? You can see here when it hit the 24th, the next day was down. That's Sunday, Monday, Tuesday is probably where we're going to see the upward move. So now just by understanding the equivalent, yes, this is Bitcoin, the equivalent of the threes, right? Threes. What's up, Tondura? Right. So let's go over here and take a look. Now that we know that we have an upcoming, but we are currently in the last day of pullbacks, we can go over here and look at the 4 hours. So now what we're looking for our last day of pullbacks is the last, movements to the downside. So what are we going to look for? We're going to look for the moves, right? We're going to look for a move down. We're going to look for a bounce. And then we're going to look for the last move down, right? So we know that's what's coming. We can see here that we haven't had a move down. We've only had the move up. So we're still in the equivalent of that move to the top side, right? So now that we know that we're here and we know that we're finishing up our, our pull down, we can expect the 4 hour to support the pull down at some point. Doesn't have to go all the way down, but it needs to give a little bit of effort here. Now that we have that, that's 4, 8, 12 hours. So the next 12 hours, we can expect some pullback action, right? So now that we have that all squared away, we can slide down to our 2 hours and see if the 2 hours is starting, right? So a lot of times, if you're making day trades, you want to trade with the 2 hour movement so that you understand where you're at, right? So the 4 hour lets you know what's going to happen daily. Right now, it hasn't turned down, so it's still slightly pushing to the upside. So which means it's going to give you a higher option for a good short position. Because remember, we need to finish this daily pullback, right? Now we go to the 2 hour to see where we are at that current moment. And you can see here that the 2 hour already started the pullback. It bounced, started the pullback, and it looks like it's getting ready to finish the pullback move, or at least the leverage of it, like a snowball. The weight of it is it's leaning downhill, right? So now we slide to the 1 hour and say, okay, so how can I take advantage of this? Well, the one thing that we always do is we trade at least with the 1 hour and the 2 hour in directions, right? So now that you understand how the basis of the overall market, right? Because markets are weekly, daily, 4 hour, 2 hours, those zones, right? Really, it's weekly, daily, and 4 hour. We can tell that the weekly and daily have already dumped, and now the 4 hour is looking for the final dump down to kind of like close out the bottoms of the daily and then look for an upward move. So that's where we are, where we know where the game wants to go. Now we can use the 2 hour and the 1 hour to get into daily trades or our day trade, positions to figure out what we want to do today, right? So right now with that weekly going down, that's a massive time frame, which means the pull on that is going to be pretty big. And you can tell what I mean by that is notice here, this is the 100 line, right? So I'm going to put the 100 line again. You can see that these RSIs, the sentiment, they're not even reaching the tops anymore and coming down. They're struggling to get anywhere, right? You see how this one barely made it here? This is letting you know that there's a lot of volume disappearing here. And the sentiment is that selling right now is better than buying, right? There's not a lot of, buyers in the market right now. The sentiment is no money, okay? And that's why you're seeing these not hitting. Now, to see how strong that is, you can go from the hour down to the 45 and see if that's even reaching the top. It's not. And if you get to the point where the 30-minute is not even reaching the top, I mean, 30 minutes is a small time frame. There's no reason for it not to get to the 100 line and come down like a normal trade like here. See, these are normal trades here, right? See, top, 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 right? Now, but look at the disappearance of volume right here, right? You can see in this area here, it's just not gaining a lot of momentum or volume here. And that's why you're seeing that shorts in this scenario, right? Like we've been seeing, we could see by the weekly, the daily, would have been the time to do it. And these are the areas that you would have been shorting, right? So when the 30-minute heads down, right? These are the moments that you would be shorting these areas, right? These is what you would be looking for is when the 30 starts to show weakness and heads down. These are two areas on the chart that I would have been looking to, build into a short. But it would have started on the 1, 2, 3, right? So let's go find a 1, 2, 3. Now here's the push up, that's a 1. Here's the first pullback, that's a 2. And then when this starts to pull back here, this would have been number 3, right? This would have been 1, 2, 3. That finished my move, and then my next move is this. 1, 2, 3. So the two big areas here that would have been a little bit better to kind of look for entries on shorts would have been these 2 points here, right? Those are the beginning of the 1, 2, 3, and this is the finishing of the 1, 2, 3. This one right here is just basically when the 30 breaks down. This is the beginning of the build up, right? So we can see right here we're starting to build up, right? We have a push up, we have a pullback, and now the 1, 2, 3 is actually looking like it's looking to go up. Now that we have that ideal in our head, right? This is what we call a strategy, right? So when you trade, you need to have a strategy, right? Like you have to think of like this, right? So day one of trading, right, is I'm going to do something 10 times in a row, and I'm going to track the results of the 10 things that I do. And I'm going to follow the same steps 10 times in a row to get to a position of what that gives me. So if you're going to buy a trade, enter a trade, or do something in a trade, you need to have your steps, right? Step one, how do I find a trade? What trade am I entering? Step two, why would I enter the trade, right? Confirmation of the trade that's happening, right? And then step three is simply getting into a position where you're like, okay, step one, locate a possible trade. Step two, confirmation of the trade. Step three, why am I entering the trade and when? And then, step four, how to enter it, right? So that's what we see here on Bitcoin, right? 1, 2, 3, 1, 2, 3. So this right here would actually be confirmation for us to look to enter this trade. So now that I have a confirmation of a 1, 2, 3 movement to the upside, I can go take a look and say, okay, how would I enter this trade? Well, I'm going to enter when the 10-minute is heading up. So this would have been right here is where I would actually have entered this trade. So you can see that it would have happened right here when the 10 minutes started up, right? That would be confirmation for me to start looking for a trade in here, somewhere in this part right here. And that right there would be an entry point for me to start looking to enter a trade. And then the next thing is the steps that I would enter with, right? So for me, these are called rules. So now that I have a long trade possibility, right? And I'm going to go ahead and type this in. Possible long, right? Now that I have a possible long, what I need to do here is confirm that this is going to be something that I'm going to get into. So one of my rules, right? Rules are, things that you put into place so that way you don't get into a trade um, at the wrong time or you don't have the best entry, right? So the number one thing that you want to do is you want to write down when entering a trade, the number one thing you want to do, right? And let's go ahead and type this in real quick for you. So, number one entry step, right? And this is going to be greedy, right? Number one entry step. And this right here is going to help you guys save a lot of bad trades that you make. So if you want to make better trades, ASAP, it's called no liquidity. So yeah, we know what it's called, but let me ask you a question, ASAP. So if there's no liquidity, what does that mean? Right? Liquidity comes and goes, man. That's just people going in and out of the market. Now, when you say liquidity, right? Now, what I want to do is go to Coin Market Cap, and I'm going to look at the overall market. So right here, you go to Coin Market Cap, and I'm looking for the market cap of crypto. We're sitting at 2.97 trillion. Now, let me see if we can actually. Is there a? Here we go. So here's the market cap. And we can see that on the 14th, right? You see the 14th there? On the 14th, you guys can see that January 14th, we were at 3.3 trillion. And today, well, what was that? This Sunday, we hit 2.9, and we're sitting at 2.9, heading towards, the low level here, right? So just like a chart, you can look at your liquidity or your market cap, and you can see that we're down right now from 3.29, right? Trillion, right? So we're missing some billions of dollars here, right? So that's the scenario where you're watching as time goes. Right now the money's down, but when the money's down, it normally comes back in. So it makes sense for us to see some type of uptick in the future to kind of like roll. Because remember, when the market cap gets to 2.9, that's when it normally rides back up to 3.2 or 3.3. So you're in a good position here on the overall. So let's get back to this chart. So the steps that you need to take here, right? The steps that you need to take, right? And what we were talking about here was entry to greedy steps, right? So the very first thing that you're going to do here is you're going to look for lowest support, and you're going to look for, and you're going to trade with 1 hour value. Right? And normally to get a good long, right, we want to use the 2 and 4 hour RSI strategy. That's the best long you can do is trade with the 2 hour and the 4 hour after it builds momentum back into the trade that you want to do. Okay? But these are the basics, right? Depending on what type of trade you're doing, you're going to first always look for the lowest support for your entry. That means you're being the greediest entry. And what that's going to do is just help you not make bad decisions and get in too early and give away profits, right? Because this is a game of 20 to 30%, right? This is a game of 20 to 30% profits. What I mean by that is you want to have a $2,000 to $3,000 bag, right? And you want to make $300 per trade, which means you have a $3,000 bag. You need to make 15% on your trade, which means you have to learn to find trades that average 20 to 30%, so that you can have 15% trades closed for you, making you $300 per trade. And you want to do 5 to 10 trades a week, so this way you have a solid $100,000 six-figure trading system. Does that make sense? Hit ones in the chat if that makes sense, guys. Hit ones in the chat. So to do this properly, the first thing you need to do here is you have to, and don't forget to share the live, guys, and keep hitting the like button. We need to get to 100,000 likes. First thing you got to do here is you got to trade with a strategy and inside of that system, right? So the first part is, now that we know there's a 10-minute trade here that we could be going long on, right? Now we're going to get to the point where we need a 1 hour heading in our direction, which it looks like it's starting to get there, right? This is the 1 hour, right? When this heads up, that's going to be a trigger for us to confirm the long trade. And then we also have what's called the 2 and 4 hour strategy. Now, these are strategies that basically give you the best longs and the best results, is when the 2 hour RSI is headed up and the 4 hour RSI is also headed up with you, giving you the best trade. Currently, the 4 hour is headed up, so that's going to support half of your support, and the 2 hour does look like it's bending up. So you do have support on the 2 to 4 hour. So all you need now is you need the 1 hour to start to bend up. So to see the 1 hour, we slide over to the 45 minute to get a heads up, 15-minute read. We can see the 45 minute is starting to bend here, right? So now we have the 4 hour, the 2 hour, the 1 hour starting to bend. Now this confirms that our 10-minute entry, right, is pretty decent right here at this level. So now that we know that we can get into a long position, right, a temporary long to get, 20 to 30%, now we need to start looking as far as support and resistance. So let's go over here and take a peek at, some things that we already, can see and look at. So we're going to take a look at the chart here. And currently, this is giving us our move here now, right? So now a lot of times, and we also have an upward trend here. So you can see now that we're looking at the candles, we can see the parallel channel showing us that there's an upward trend here. And the upward trend is confirming that we're moving to the upside. Now, a lot of times, depending on how you're looking at the upward trend, where you want to look at it, the bigger the time frame, the more possibility of it being correct. We can see that the 15-minute is still slightly down. We haven't had a higher high to move that up, which means that we're currently going sideways. And if we look at the 30-minute, right? And these are steps to your strategy. You can see that on here, we are still in a downward trend on the 30-minute, right? Which seems to be changing because based off our volume, which we can see down here, you can see our 30-minute volume has got above the zero line. Now this indicator right here, this is called the VC Making Trading Easy. This is our moon indicator. This is our volume indicator. This is the indicator that we look for to confirm that volume is going in the right direction. And you can see here that once the volume breaks above positive, right, we needed to confirm and stay above. So this actually shows right here that we are, you see that right there? See how we broke above positive and then it hit the zero line? The zero line is basically the line between negative and positive. And if I drew a line right there, that would be the line, right? And you can see it bounces and starts to head up. This is the first set of move, is what we call the three move, right? So here, volume breaking above the positive line, volume retesting the positive line, and then volume actually starting upward, which would be right here, 1, 2, 3. So that's the first set of threes. Now let's go take a look at the chart to see if you are watching the volume correctly. I'll show you right here. This is the candle that would have been the first sign of, okay, this is the candle that would be the, what we call the first sign of a possible trade. Okay, possible long. Now, based on that possible long, right, we don't get into the trade at that time. What we do is, our very first step is what? Look for support and resistance. So the very first thing is to go to the last low, right? And you can see right here, the last low was right here, right? And that price would have been right there at the bottom of that candle, 87,004. Now, if you look at the chart as we go sideways and we say to ourselves, we're going to set an entry, because remember, you're above it here at the possible long. You're already above that. We're going to set an entry, and it would be at the same price on that same level of 87,066 or whatever. And you can see that we actually get that hit right there. So that would have been your entry right there. So there's your long entry. So this pull down to this section here, I'm going to turn that green because that's our entry. Now we would have been in this entry here. I'm going to turn this into an 8. That would have been our entry point, right? So you see how that works? Possible long. Look for the retest entry, right? This is the low support. Bottom. And 12. There we go. And that would have been the lower support. So you see how that hit there? Hit ones in the chat if you see what I'm talking about. And this is where you're setting yourself up that when something's moving in a direction, that you're then setting yourself up to get the pullback, the retest, to get into a better position. So now that we see that that's happened, the possible long, right? Possible long right here. Then we wait for the move to the upside, right? And then it pulls back and we get our entry. And that is where we're at right here. We're on that move right there. So that's the move that's basically setting up here, is for this breakout from this, area here to get its next move to the top. And then once it gets its next move to the upside, we're looking for the pullback, to go back and finish off the weekly, the daily moves over the next, 1, 2, 3 days. We got another day of pullbacks, but there's always pumps as things go on, because people are buying, to understand the market, that people are buying the areas of support. They're cost average buying into the day. So this is why these type of trades, come into play, is because you're playing inside of the game and the marketing for what's happening on the chart. So now that is, the way to kind of see how that works out there. So that would be, how to see your support and resistance on your 30 line, where you would be entering. And then that played out pretty nice here, because if you looked at that entry, if you would have caught that entry, you have a move so far that went 1.79%, right? That's how high it hit. So let's do the math on that, right? So remember, if we're doing a $3,000 trade and we're doing a 20x leverage, right? And we're taking profits at 15 to 20%, because all we're looking for is a $300 trade. What up, Carlos? Zachary, what up, man? Don't forget to share the live, guys. So we are looking for a 20% move, right? So we need a 20x leverage. We need a 1% move to give us 20%. This trade actually almost goes for 40% on the 20x leverage. So it reaches about 30%. Now, we teach and train everyone to go for a 30% gain, because that way hitting a 20% trade is literally almost guaranteed. It's going to raise your chances, your trades, your chances by 10x. But more importantly, you're going to hit guaranteed 8 out of 10 of these trades. So here's a $3,000 trade, 20x leverage, set at the correct 30-minute support zone, gets the entry and rides 1.7% up. On a 20x leverage, $3,000 trade, this is a 35%, 30% trade where you're aiming for 20%, which you hit. What does that mean? That means you have just taken home $600 on this trade. Your goal is 300, right? Your goal was just to get 10%, but you need to get 15 to 20 for fees and all those other things that you need to do. And that was a very successful trade. So this is how to see and build the momentum trade that you're looking for. Those are the steps that you're taking. So go ahead and rewatch this video so that you can go over these steps and put yourself in that same scenario, and understand that you want to have a greedy entry, look for the low support, set your limit order where you need it to be, trade with the 1 and 2 hour volume, etc., etc. So you're going to have all those things that you need to do. And just go back and take a look at this. Control copy. And that's going to put you in a position where you are setting yourself up for success, right? By being in the right areas and being greedy on your entry, so that you're not getting caught in the in-betweens, and you're taking advantage of the higher possibilities of success, right? That's kind of the secret to the trading, is just, eliminating your bad entries and getting into trades that have a higher success rate of winning, right? And now if we're following this up as this starts to build momentum, let's go back here, because remember, this was just the first set of the 30-minute trade. Now let's move to the next one, right? So the volume breaks positive, comes back, retest, here's our entry. Now we repeat the system, right? So now we have a breakup, right? We have the pullback, okay? And then from here, this is where we start to see, after the pullback comes down, we start to see the movements to the top, because here's your pullback. If you mistake this one, possibly, but you want to see an angle, right? You see how that angled up? That's volume right there. So now let's recap and say two possibilities. Movement one is up, movement two is down, and then we have our movement to the up with a nicer push to the upside where you can see it clearly that it's actually pushing up and not going kind of sideways. And that's the difference in this kind of like scenario right here. Right, that's kind of like going, it's not a definite move to the top. So this would be right here. This becomes our next entry point that we can look at. And let's take a look how that played out if we're running the same game. Right? So we go back here, we get this push up here. Now we're going to move this over and we're going to call this arrow here the possible trade. Okay? Possible long. So now that that happens, what do we have to do? We have to go back, right? Look at our supports that we had, right? And our supports would say that this would be an area that is a low support zone, right? And I'm going to show you guys here, just kind of you can understand of trading with your, I don't want to leave this entry trade here until we get there. This section here is, and the reason why I'm showing you this is because I want to go back and look at your RSIs. There we go. And that's going to be right here. So that long that we did earlier that got that percentages, that's this RSI section here. So first things first, let's take a look at the 1 hour, right? You can see right here the 1 hour pulls down, starts to go up right here, moves to the upside, and this would be showing you that that's a good where to trade. And then we want to look at the 2 hour in that box. You can see that the 2 hour has got to the top. It hasn't crossed down. It was finishing it top line right there. And then more importantly, the 4 hour, right? So we want to trade. Here's the 4 hour headed up, right? And that's a good section there. You see how that's in that yellow box right there? You can see this yellow box. So what that's meaning right there is that it's on an upward trend. So it's a good long position that you can play. The 2 hour at that time is at the top of the 100 line, but normally it's peaking out there, so the continuation of exhaustion. And the 1 hour is, this one's slightly coming down here, which could have put you in a spot where, let's say that you decided when you saw that, you said, I'm gonna wait for the 1 hour to come down. And then what happens is when the 1 hour starts to cross over, you decide that you would enter here. Now let's take a look how that plays out for you. And the reason why a little bit of all this would be, that's why we have our support set up at this lower level. It's because what happens is by picking that lower level support, you can get yourself out of some of those scenarios right on the 30-minute. Let's go to the 30-minute real quick. Possible trade, 30-minute pullback. We get the pullback here, see? So even if you were waiting on the 1 hour, you can see here by the orange line down here, and you were waiting for all that to happen, when that line started to move up, you would then go back to the lowest support, which would have been this low support here anyway. So not these little reds that are almost in the same zone, right? This is not support and resistance. This is a cluster. You want to go down to the low or move down. I think that's where some of you guys make the mistake. That's why I wanted to cover this. You want to pull back even further. You want to be greedier. You don't want to have the bottom of the cluster or the bottom of the channel as your entry, because most of the time they're going to blow past that to liquidate people, and they're going to find the lower support, right? So go back and watch that video and see what I'm talking about, right? So now moving to this next trade will be a little more focused on that. So right now we have a possible trade here, right? See our possible long is happening. Our support, right? As we look at this candle here, if we go backwards, it's going to be the same support that we had earlier of the possible pullback, right? So for here, you wouldn't pull back to these lower support areas that are in the parallel channel area. You would simply go back to the lower support, which from here, it ends up being that same lower support line, which is the same entry that we got earlier. And now here's your entry here instead, right? Kind of crazy how that plays out the same way. So this is for the people to pay attention here. A lot of times you got, what up, VC? I get them shorts. Yes, sir. Shorts are the best. So that plays into the area of where, when you see a trade start to run and you panic because you think you're going to miss the trade and you don't realize that you're in a game of manipulation and emotions where you have to be greedy on your entry. It doesn't matter if you missed the first trade. Look how it came back a second time. You will always have another opportunity at the trade that you're looking for. So keep that in mind and follow the rules of your strategy, right? Follow the rules of greedy entries. If you do this, hopium, if you do this, you will always end up with the better entry, and better entries mean higher possibilities of success, right? So notice how this trade came back to where we wanted it to come back to, and we still got our entry. And guess what? If you got that entry again, what did you do? You hit your 1.7 trade again, which is another 20-30% off this trade, which means you locked in your 20 on your $3,000 bag. Here's another 600. So far on this trade during this day, you're already up $1,200 on this trade. Minimum six if you're doing the 15% on your $3,000. So now let's rotate one more time back into the 30-minute volume 1, 2, 3 move. We see the push. Now let's repeat. Once we have a push, what do we need? We need the pullback. There it is, right? There's the push. Here's the pullback, right? Up, down, 3. 1, 2, 3, right? And then just kind of show you there. Here's your push up, right? And then it decides to do what? Gives you a baby pullback right there. And then moves to the upside. 1, 2, 3, 1, 2, 3. Or 1, 2, 3, 1, 2, 3. All right, now that's done. So we need to move for the next move, right? So what's the next move? Next move is the opposite. It moves down 1. Then it bounces 2. And then it pulls back a third time 3. Which means we are now entering this trade here because it's starting to move up. And now all I'm going to do is move this box down to this upward movement. And all we're doing here is just collaborating inside our relative strength index to see where we're at here to create the trade that we would be looking to get into, right? And then we'll just keep it right there. And now here's what we're going to do. So 1, 2, 3. We click over here. Let's go check our 1 hour. Okay. Our 1 hour is starting to bend up, right? Starting to bend, not quite there. Our 2 hour is pushing up. Notice, look at our 2 hour. Okay, look, 2 hours bending up. Beautiful. That's a good sign because it was heading down and now it's pushing up. That means you could probably get in this trade, and the 4 hour still headed up. So we have our 4 hour up, our 2 hour up, and our 1 hour swinging around. Go to the 45-minute to see where it's at, and you can see it's already bending up. So this means right here, we would be looking to get into this trade. This is a possible trade again, right? Possible trade, and where are we at? So let's move our possible trade over. And our possible is on this candle here. So which means what? Which means we have to go back to our support, right? And our support is in the same position, right? Now, keep in mind, we're building momentum. We got 1 trade, 2 trades. Now we're on our 3rd trade, which means momentum is going to be a little bit bigger. So you don't need this lower support. You need to slide up to that middle area, which is probably this bottom candle here, right? And you have this parallel channel where you also have possible support that you could play off of these, areas here, right? So that's where you would be looking to, move into those trades. And you would look to get that type of, entry point right there, as the momentum builds, right? A lot of times after you've had these trades happen and you went up and you get those moves to the top, you're already pre-planning the lower level entries, which would be, these levels down here. And you can see right here that this lower support off of this area here, it doesn't quite reach it, and it ends up only coming to this area here, which means if you're watching this final push to the upside, which because we're getting close, because the 4 hours at the top, the 2 hours at the top, all these are kind of like getting exhausted. The third trade, remember 1, 2, 3, we already hit 2 trades. This is the last trade, right? This one is going to be the one that finishes off the push to the upside and then starts to head the other direction. So more than likely, it's going to have a blow off top where it doesn't pull all the way back to those lower supports. And I think this is where you guys, when you don't, that's why I'm trying to teach you the game of three, is because if you're not aware of the three, then you're not aware of what part of the game you're in, right? This is the blow off part of the game, the end of the game, which means your support zone, which would be lower down here, would change at the last part of this game, because blow offs are going to have more volume to kind of like push up in that final push. So they won't pull back as far. So you'll see the pullback that hits right here. That would normally be where you decide to set your next entry, would be right there. Right now, unfortunately, we have missed this entry, right? So which means that we are now in a position of, if we're doing a $3,000 bag, we're probably not taking this trade, and we would just wait for the blow off top to finish, and we would just go for shorts, right? Because right now we're in the in between. We didn't catch that last support, and it wouldn't be worth the risk of trying to catch this last, push to the upside. So it would be here. Normally I would have caught this, because once I see this pull down to here, right? Once I see that move, I know that I'm getting a blow off top. This is the third trade here. I know that's my entry point, and I would have put my buy somewhere a little bit higher in that area. I've been looking for support in this, basically the bottom. This is where the bottom of the channel that was created earlier, right? Because you see here, we blew through the bottom of the channel here. You see this area here? Once you blew through the bottom, you're not going to see that again on the third leg. So right here, after it pushes up, you can see that it retouches there. That would have been our entry point right there, the third leg entry, right? So now we're in a position where, are we going to blow through this, this parallel channel? Yeah, I mean, we're going to push through this. How far? That's the question. But I like to have a good entry. So the only thing that I could do here would be saying that if I'm going to enter this trade, I would take the middle of this parallel channel, and I would put my entry right there, and then that would be my trade. If I'm going to get it, that would be where I would be entering and looking for, some type of entry. But more than likely, what I need to happen here is this needs to blow through, then it needs to pull back, touch my entry, and then that's where I would see the big move to the top side. Once the 1 hour, 2 hour, reset, go down and come back up. So for me, this is the third part of this trade. It's a third leg. I want to see it, I didn't catch the entry properly, which I would have been, like I said, once it comes to a third leg, your third leg would be the bottom of the channel, only after it blew through the channel already, showing you that it's already swept the liquidity, right? You see this sweeping area down here? As long as it already swept the liquidity from the lower trades, okay? If it's already done that, then you can play an entry off the bottom of the channel, which we missed. So now the next entry is to blow through the top of the channel, pull back to the top of the channel or the middle of the channel, get that entry, and then make its third leg up, right? So right now it's working on, If you're listening to Elliott waves, right, this is wave 1. We're looking for a breakthrough of the channel. The pullback is the retest where most people will buy normally, or the middle of the channel, and then they will push up based on FOMO. So more than likely, we're going to have to wait for a 1-hour reset. But go back, watch this video, and then start implementing these simple rules, and you'll start getting better at getting the best entries. Okay, guys? So other than that, man, I'm going to hop off now. Let me close out this YouTube channel for the lessons for the Discord. If you guys are not in the